Welcome to Wealth Talk, where all it takes is few minutes a day to get started on your wealth journey. Today, we're tackling a common question. What's the difference between a debit card and a credit card? Let's break it down in just a few minutes. First up, let's talk about debit cards. A debit card is linked directly to your account or has a preloaded amount. When you use it to make a purchase, the money is withdrawn straight from your account. It's like using a digital version of your cash. With a debit card, you're limited to the amount of money you have in your account. There's no borrowing involved, which means you won't accumulate debt or incur interest charges. It's a great tool for managing everyday expenses and staying within your budget. Always check your account balance before making a purchase to avoid overdraft fees. If you linked to your bank account, it works as an ATM card. You can take money out, but some ATM network may charge an ATM fee. When you're ready to pay, simply swipe, insert, or tap your card at the terminal. You'll typically need to enter your PIN for security. Choose a PIN that's easy for you to remember, but hard for others to guess. Use your bank's mobile app or online banking to monitor transactions. If your card is lost or stolen, contact your bank right away to help spot any unauthorized activity quickly. Set up alerts. Most banks offer text or email alerts for transactions. Now, let's switch gears to credit cards. A credit card gives you a line of credit, meaning you can borrow money up to a certain limit. When you use it, you're essentially taking out a short-term loan from the credit card issuer. Credit cards come with a billing cycle and a due date. If you pay off your balance in full by the due date, you can avoid interest charges. However, if you carry a balance, you'll be charged interest based on your APR. Unlike debit cards, credit cards can impact your credit score and offer benefits like rewards and purchase protection. When you use a credit card, you're borrowing money up to a certain limit. For instance, if you have a $1,000 credit limit and you spend $200, you've borrowed $200 and have $800 remaining of your credit limit. At the end of the month, you'll receive a bill for the amount you borrowed. If you pay this off in full by the due date, you won't pay any interest. But if you only make the minimum payment, you'll accrue interest on the remaining balance. So, always pay your account balance in full before the due date to avoid paying interest and fees. When you're ready to pay using your credit card, simply swipe, insert, or tap your card at the terminal, much like a debit card, but you don't need to enter a PIN. However, there are some instances you may need to enter your billing zip code for added security. Let's summarize the main differences. The spending limit on a debit card is limited to the funds available in your account, while the spending limit on a credit card is your credit limit, which means the credit card issuer allows you to borrow money and let you pay before the end of your billing period. Usually there is no interest charges or fees for transactions for using a debit card. As for a credit card, there may be interest charges apply if the balance of your credit card is not paid in full. Also, some credit cards have an annual fees. A debit card has no impact on credit score since it is not a credit product. Whereas, a credit card can impact your credit score positively or negatively based on your payment history and credit utilization. With a credit card, you can dispute unauthorized charges. However, charges on a debit card cannot be disputed. So, which card is right for you? If you're looking for a straightforward way to manage your money without the risk of debt, a debit card is a great choice. It helps you stick to your budget and avoid interest charges. On the other hand, if you're interested in building credit, earning rewards, or having more flexibility in your spending, a credit card might be the way to go. Both debit and credit cards have their unique advantages and are useful in different situations. Understanding their fundamental differences can help you choose the right one for your financial goals. Thanks for watching Wealth Talk. If you found this video helpful, give us a thumbs up and don't forget to subscribe for more tips on managing your money. See you in the next video. Understand that knowledge is power. Watch this channel, gain knowledge, and become wealthy and powerful.